Man, what's up with you guys? How y'all doing, man? I was thinking today, I was like, what type of video am I gonna make today? What type of video should I make today? Then I was like, I should tell everybody how important investing is. How important investing into their self, investing into their Roth IRA, investing into their 401k is. Because I don't think this is knowledge that everybody gives us, but we have to kind of go out there and learn all this stuff by ourselves, right? This investing stuff, this uh, opening your Roth IRA, opening your personal brokerage account. These are things that they don't teach us, right? They don't teach you how to create a portfolio, a balanced portfolio to start investing into yourself. Like when I learned all these things by myself, I was like, man, like this is the way. This is the way to creating wealth, right? Because for majority of us, like just creating a business idea or going online and having another stream of income is kind of hard for everybody, right? Because not everybody do it. The people that you see are very successful at it. They've found, I don't want to say a shortcut, but when it comes to success, part of it is luck, and then another half of it is intentionality, right? So actually being intentional with everything that you're doing and being consistent. But the luck aspect of it, majority of us haven't found it, right? To create that side income. But when it comes to investing and creating wealth, it's so easy now that it's finally clicked for me that you can invest your money into the market. You can invest your money into companies and make profits off of it, right? And make profits off of it long term, not thinking in the short term. Because when everybody thinks about making money in the stock market in the short term, you're thinking about trading, you're thinking about day trading. The influencers you see probably making 200 to 300 every month, or every few days they're making 200, 300, 400. They'll show you a $1,000 day, right? Not that, right? And those people, all power to them. They got what they're doing. They got it. They know what they're doing, right? But that's not for everybody. That's a skill that's not for everybody. Trading isn't for everybody. Trading isn't for everybody. So the same way trading translates to them and they could understand it, that's the same way you can go out and learn investing, which is easier on the other side of things, right? It's not as difficult as trading. Although you got to still go understand how companies work, what ETFs to invest into, what broad market ETFs to invest into, what index funds you can invest into, but it's not as difficult as trading. Whereas trading, you're learning how to put a stop loss. You're learning how to trade with support and resistance, and then someone in the government says something and then it could just mess up your whole play. So trading is a little bit different from investing, long-term investing. Long-term investing is a little bit more of investing into individual companies or investing into broad market ETFs, right? That track multiple companies, that track like the top 500 companies, or the non-financial companies, like your top 100 non-financial companies. So that's what long-term ETFs track. And there's different sectors, there's different industries, there's different ETFs that track different industries. So once you learn that, then you learn how to slowly build wealth. That's one of the things I wish I knew early on, especially when I was back like 18, 17. If I knew that I could just have my parents open a Roth IRA for me, and then I could still be because I was working at that time, I could still be contributing my own money right into this Roth IRA, but it's under my parents. It's under my parents, meaning I'm under my parents' account, but when I turn 18, I could ultimately switch that account to me, and now I would have personal guidance and oversight of this whole account. So you got to kind of understand that building wealth slowly is the way to go. It's the way to go. Like, not trying to make quick trades, I fall into that trap, like losing money, right? Yes, I'll make some, but I'm also losing some. I was also losing some at the same time, because you have to understand, you have to be more scared of what you don't know when it comes to trading, when it comes to even investing. You have to be scared of what you don't know. That's the only issue when it comes to trading, right? Trading is one of those things, like, if you don't know something, you can know all you want. You can know a lot of stuff. But the one or two things that you don't know, the one or two variables that you don't know when it comes to someone probably says something in the government that's going to make your stock do something, go the opposite direction than you thought it was going to, or another war comes, or uh something on the macroeconomics level happens that you're not aware of that could ultimately hurt your play. That should scare you more than everything that you do know, right? Or everything that you're boxing off. Okay, I have my stop loss, I have support and resistance, I'm looking at my patterns, I think I'm ready, and then you're going to go into this trade. But usually what happens is you're missing a few variables when it comes to trading, which is why you probably end up losing money, which is probably why you will end up not making the money you thought you were going to make in a trade. So I've learned to be patient, right? If I'm going to enter trading, I'm going to enter it slowly. If I'm going to start trading, I'm going to enter it slowly. I'm going to actually understand what I'm doing. Make sure I understand all the variables that can impact my trade. Make sure I know what a stop loss is. Make sure I know how gamma works. Make sure I know how theta works. Make sure I know how all these things work before I enter it. But as far as investing, that's something, I got down pat in like 3 to 4 months. Just reading, doing research, being intentional with my time. So going out and doing the research, understanding what I'm doing exactly, and not just buying into random companies, right? Although there was times, I think 1 or 2 investments that I made, it was just like not random companies, but hype companies. Like it was I think it was MicroStrategies, the Bitcoin, the company that has a lot of Bitcoin reserve. Those were one of the speculative companies that I was buying into. But although, those are high risk, high reward plays, right? At the same time, but you can also lose your money, right? Because when they go down, they go down. So understanding that building wealth is a long-term process, understanding that building a well-balanced portfolio also is a long-term process, right? I kind of learned that late, but now you set up your system in a way so if you're doing both single stocks and you're doing both ETFs, which I would advise anybody to do, right? I'm not telling you what to do, but this is educational. So this is something I figured out. Like, okay, if I'm going to create a portfolio, right? I want a well-balanced portfolio. I don't want to fully be vested into just stocks alone. And then when a down market comes, like I'm cooked. Like everything I get like wiped out. Not wiped out, but everything goes down. My portfolio starts bleeding because the whole market's down. I'm investing into a bunch of tech stocks. I'm not investing into the overall market. So I learned early on that, I don't want to say early on, but I learned currently, like in the age I'm at right now, which is early on, but I learned like, okay, I need to have a balanced portfolio. A balanced portfolio, what is that? That means you have to have a portfolio filled with ETFs. That's what all it means, because ETFs are safer. ETFs are just exchange traded funds. So once you have a balanced portfolio with ETFs, then you can have your VTIs, your Vanguard Total Index, which covers a lot of the major companies, around like 3,500 companies in the USA. Then you have your VOO, which covers the top 500 companies in the USA. Then you have your VXUS, which covers some of the international companies. Then you have your QQQs, your QQQM, which just has a lower QQQM and QQQ are pretty much the same thing, but QQQM has a lower expense ratio. So over the long run, you're gonna be able to save more money by investing into QQQM instead of QQQ. But just understanding that I have to create a balanced portfolio aside from my stock, which I do, my individual stocks and everything. I have one portfolio. Then I have another portfolio where I have my ETFs. If that's making sense, let me know. Right. So you have a well-balanced portfolio. So when the market's bleeding and all your tech stocks are down, or all your AI players are down, like your AMDs, your Nvidias are down, your Robinhoods are down, your Apples, your Microsofts, and all those tech companies are down, you also still have a well-balanced portfolio with your QQQs, VTI, SMH. SMH is not a risky one, but it's one that will dip to when the AI or tech companies are down. But it's still a good one because it covers the whole AI sector. It covers the whole semiconductor sector, right? Your Nvidias, your Broadcoms. So once I learned that, I was like, this is the formula. That's the formula right there, right? That's the formula. Having a well-balanced portfolio. So you're not too invested fully into just single stocks, but you also have your ETFs at the same time. You also have your ETFs at the same time. So once I realized that, I was like, bro, this is a key to having a well-balanced portfolio. Because over the long run, those stocks go up. I know you guys seen in late March, early April, things were down. Things were down. Like we're down. We're in a down market. But then, as soon as things were getting resolved with the war we had going on, things started getting resolved. There was talks about peace talks. Everything skyrocketed to new all-time highs. So at the end of the day, the market always recovers. It always goes back up, right? It always goes back up. Your individual stocks that you believe in, that you're certain will go up after you've done your fundamental analysis, after you've done enough research, they're always going to go back up. No matter as much as you see them bleeding, you have to understand this. If something is not fundamentally wrong, when I say fundamentally, like the numbers for a company are going down, the revenue for the company is going down, the net income is going down. If something's not fundamentally wrong with a company and it's just a war that's happening or something that's on a macroeconomics level that's causing, like last year in March, we had the tariff. The president said tariffs were going to happen, and the whole market went down. But that doesn't mean the company is doing bad. That just means the overall market is doing bad. So when you see your stocks plummet like that, that's your time to get in. That's the secret right there. That's your time to get in, because you have to wait and seize those opportunities when the market goes down like that. The same way it went down in April, the same way it went down in March of last year, of 2025. So just think of that. When you see opportunities like this where there's a war or there's something that's said that brings the overall market down, that's your time to take over and have enough money to be investing into your ETFs, to be investing into your long-term companies that you want to hold. So just think about that. The importance of investing is real. You have to start investing as soon as possible. Like, there's no, like, I don't know. Like, once you're making money, once you start making income, like, and you have, say you're making 4,000, 5,000 every month. Once you start making that type of money, like, now it's time to grow that. And it's time to create wealth. You can create wealth through holding long-term assets over the next 20 to 30, 40 years. Man, that's just what I was thinking about, man, making this video. I want to honestly tell you guys, like, start investing no matter what. Like, if you learn it, learn how companies work, learn what fundamental analysis is, learn a little bit of technical analysis, because you have to understand charts to a certain degree, and learn price ranges, learn market cap, learn what all that is, learn how companies are making their money, right? How your Amazons are making their money, how your Apples are making their money. Learn how the different companies that you want to invest into are making their money. Thanks for watching this, man. I hope y'all just start investing, bro. All right. Peace.